I am riding around looking at houses that are going into foreclosure. Boy, does that sound exciting or what? Yeah. Well, welcome to Kevin Navigates. I'm Kevin. I'm actually driving. I just left a property, headed to another one right now. And today what I want to talk about was these job challenges and the job market and what's happening with real estate. So if you haven't been here before, welcome. If you're coming back, thanks for coming back. Today it's all about the challenges ahead. Are we in recession? Are we headed to recession? What's happening with the job market? What's happening with real estate? So anyways, let's jump right into what's happening. And the first thing I was going to, nobody else wants it. So when nobody else wants to buy anything, that is definitely the time for you to say, I should buy, or I should at least looking at buying. So with what's happening with the job market, what's happening in our economy, what's happening in real estate, you're like, well, now is the time, or did I just lose my job? Am I going to lose my job? How stable is it? All those questions gets raised. So, anyways, it's something that I watch all the time. I'm involved with real estate. You know, when you look at things, people look at the stock market. In the stock market, they think, well, you know, that's when the economy is going, you know, down the tubes or whatever. And actually, it's not. The stock market is not a good indicator of how the economy is doing. For example, if you've lost your job or worried about your losing job, for example, let's take Microsoft. Microsoft just cut in Redmond, Washington, I think it was 2,000 or 2,500 jobs. And you're like, well, yeah, that must be terrible for Microsoft to be doing that. And of course, you know, they put all kinds of spin. It's a sad day, blah, 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 whatever. But their stock went up by 7%. You know, the real estate market, the stock market, the bond, it doesn't have feelings. It's you know, the market's probably viewing it as a good thing because that's payroll gone. Is AI replacing those jobs? Possibly. Is it, you know, a downturn in the government not buying as much software, or individuals or businesses? Who knows? Really don't care. But it's just things like that happen, and they'll catch you off guard. I feel bad for the people out there that lost their jobs or are going to, you know, lose their jobs because of a downturn or something, you know, to that nature. But it's all about preparation. How are you prepared to handle when something like that is going to happen? And the first thing is, you know, everybody should have 3 to 6 months worth of money available to them. It doesn't have to be cash on hand, but money available to them. And I'm not talking about, you know, borrowing money. I'm not talking about credit cards. I'm not talking about, you know, a HELOC. I'm not talking about any of those. I mean, actual money set aside in case something happens, to give you time to figure out what to do. And I was in a position when I was younger, I was very aggressive, rolling the dice, and I didn't have that, and it pretty much crushed me. So I'm hoping that people are smarter than me, and they're not putting themselves in that same situation. Well, anyways, so what got me interested in to go out and look at some houses is the fact that, one, it's in my normal travels. Two is the fact that, you know, watching what's happening with mortgages, mortgage defaults, the 90 days where people are getting behind in their payments. You know, there's some data that I saw that, you know, foreclosure filings increased by 11% in the first quarter of, you know, 2025. So the first 3 months of the year, foreclosures went up by 11%. Now, if you look at a long-term chart, we're very historically low on foreclosures right now. And you're like, well, must not be that big of a deal. Well, the reason it's not big of a deal is because the past administration, they didn't allow for foreclosures. But if you were to look at the data that talks about FHA loans, and it talks about how many days haven't paid, or how many people haven't paid in the last 90 days, or longer. That list is getting so much longer. So so foreclosure starts are up 14%, and bank repos are up 8%. Now listen, when you start talking about bank repos, the last thing that a bank wants is to take a house back. It is not in the business of holding real estate or sitting on it or trying to sell it. Banks do not want to repossess it. Really anything. They want to be paid. That's what they want, is to be paid. So that, repossessions are up, by 8% in the first quarter. It's a pretty high amount. I mean, they're going to have to start explaining this on a year-end basis of, how many homes are out there. So, looking at when I said that the stock market isn't a good indicator of the true health of the economy, is because the stock market is a very small piece of it. To give you an idea, the bond market is 10 times bigger than the stock market. And then what's infinitely even bigger than the bond market is the real estate market. The real estate market is probably the largest market in the world. You look at the trillions of dollars of real estate out there, it's enormous. Well, along with just some people losing their jobs, companies cutting back, Trump administration in there, that's completely changed. They want to, they're all about getting money, getting assets. Everybody talks about, your house being your biggest asset. Your house is not your biggest asset. Go through foreclosure or go through bankruptcy or go through anything like that. It's probably your biggest liability. It's probably your biggest debt, but it's not necessarily your biggest asset. So, there's a lot of things happening in the real estate market, along with just on the residential side, but you look at the commercial side. I was listening to a friend of mine talk about a building that was offered to him by the bank that the bank had repossessed, and it was an office building, and they wanted him to buy it. And of course, they wanted him to finance it, through the bank. And he took a look at it and ran the numbers. And the problem with it was the price at which the bank wanted to sell it to him was a good price. But the problem was that the building was 30% leased. So it wouldn't cash flow. You needed $585 per square foot to convert that space into housing, which then you figure out what your rental rate is. It didn't make sense. So he got back to the bank and said, listen, I would actually have to have you write me a check to take the building off your hands, because for what it's going to cost me to get this income producing, I have to tear the building down, sit on it for probably 3 to 5 years to go through permitting, to build something, and then my 10-year projection shows that I don't even make my first dollar until about 12 years out. So I'm not interested in your building. I think that story that I just told you is going to be retold over and over again, because so much of this debt out there is sitting that it's not worth it. You can't tell me that houses in neighborhoods over the last 5 to 6 years increased by 60%. That's not normal. It's not sustainable. It's not normal. Any of those things. If you bought your house in the past 5 years at these current rates, you're probably going to be in trouble. Now, if you bought it with cash, your wife really wanted it, your family really wanted it, job circumstances, that might be a little different. But nationally, you're going to see, in my opinion, a revaluation of all this real estate out there. It just has to do it. So what do you do if you've lost your job, you don't have a 6-month cushion of expenses out there? What do you do? And the biggest thing is that you can do is communicate with your lenders, communicate with lending institutes, and just come up with a game plan of how you manage your debt. You know, there's so many things that are happening with student loans. The overall tone on the street is, whether it's the federal government, whether it's a state entity, they want their money. For example, you look at property taxes. You look at what the valuation of property taxes are. I mean, I don't even get started on that, how, you know, I believe that property taxes are unconstitutional. It means that you never own your home. There are certain states where they're flipping ideas out there to get rid of property tax. I'm all for it. I'm not against taxes. It's just in the form in which you get taxed. If it were a sales tax, and let's say you live in a state, I'll use Florida for example, where they're kicking around the idea of doing away with property taxes altogether and taking it to a sales tax. Now, it would only apply to people who homestead or live in the state, that are actual residents that actually live in the property. If you're an investor, if you're commercial, whatever, you wouldn't be exempt from property taxes. But let's say the residents that live in the state get exempt from property taxes. They're talking about converting that into a sales tax, to where I think they pay 7% now. It would turn into like a 13 or 14% sales tax. Now, there's definitely that is, in my mind, it's like a use tax. You know, it's sort of like a gas tax. You know, if you don't burn gas, if you don't go to the gas pump, you don't pay road tax on it, which is fine. The use taxes are fine. The more you use something, the more you should be taxed, or the more you should pay. Not necessarily more percentage-wise, but pay as you go. This whole idea and concept that you purchase a house and you sit on it and you pay for 30 years and you do the improvements, the whole idea that you actually are paying the value every year on an asset, I mean, it's basically, they're stealing from you, because they're taking, it's like if you own stocks every year, and you didn't sell them, you just held on to them, you paid capital gains, unrealized capital gains, and that's what that is. It's unrealized capital gains. So I'm not for that. Getting back to the job thing, everybody needs to figure out a plan, and I don't know what your plan is. My plan is, I did a video live stream on AI, how that's changing. AI is going to wipe out so many jobs out there, and it is, you know, most of the jobs that were taken out at Microsoft were management jobs. You know, I think artificial intelligence is going to wipe out so many of those jobs. So you have to really think about, how do you embrace technology? You're in a role now. Learn skills. If you're not meeting your bills, it's probably time to learn some new skills. One thing about it is that my whole entire life I've used my hands, and I can build boats, I can do fiberglass, I can build houses, I can build furniture, I can build cabinets. There's not much that I can do tile work. I mean, there's all kinds of things I can do with my hands. Is that something I want to do at my age? No. If I was forced to do it, could I do it? Yeah, I could do it. I have done it. So actually, as I'm pulling in the Lowe's right now, got to go get mortar and finish up a little project I'm working on. So I guess this is what I'm saying. What I'm saying is that, you know, I've seen these TikTok videos. I've seen these people out there that have lost their jobs, and they're going, I don't know what to do. I'm going to draw unemployment. Hey, look, and I'm not saying that's everybody. I'm saying that's a lot of the people I'm watching. I just watched one on a nurse. She was 36 years old. She was very distraught that she had lost her job, and you know, I feel for her that she's lost her job, especially being a nurse. You know, it's and she said that she was going to draw unemployment, and she didn't know what to do, and she was paralyzed by it. Don't be paralyzed. Come up with a game plan. You know, the government isn't going to save you. I've been through all of this. I mean, I've been through, my toughest time was back in 2008 through 2011 during the GFC. You know, I took on debt like a drunken sailor, and it really hurt. I'm very much cautious. It's changed everything of how I do. I value money and assets and all that much differently now. And sometimes people just have to go through that experience to come out the other end stronger. And I hope that doesn't mean that you lose everything. I drive around in a 2010 Toyota Tundra pickup. It's got 262,000 miles on it. Could I afford to get a newer truck? Yeah, I could. But you know, my goal is to drive this 1 million miles. And for Toyota to call me up and say, hey, I want your truck back because we want to take it apart and look at it, which they do. Will that happen? I don't know. Maybe that's a little extreme. My point being is that I watched a couple videos earlier, and people were, you know, complaining about their $1,000 or $1,200 or $1,300 a month car payment, and I'm going, you know, did the car dealership put you in that position? Who put yourself in that position? You put yourself in that position. So be smart out there. I know it's tough. I know if you lose your job, if it's unexpected, I understand it's painful. It's going to take you a while to wrap your head around it. And I encourage everyone to have that 3 to 6 months of expenses so you can weather a little bit of a storm and get your bearings and figure it out. Learn new skills. If you're in a job you think it might be lost to AI or anything like that, you know, learn some new skills. Network. Do a little side hustle. There's all kinds of things out there. I could go through a whole complete list and ideas of, you know, what to do. I remember in 2009, 2010, nobody wanted to build anything. And I remember I got some different jobs. I had a power washer, so I took the power washer, and I remember I power washed a whole, me and my buddy power washed a whole entire hospital. We got a lift. I had an old power washer, and that thing survived, and I think we made, I don't know, it was $5 or $6 grand. And it was time, and I used the gasoline that we used their water, and we power washed the entire hospital. And I think we both, it took us like 3 or 4 days to do it. I think we both walked away with like $2,500, $3,000, something, whatever it was. I can't remember now. But, you know, there's things out there that you can do to, you know, to make some cash, you know, quick cash money. Or set up a little LLC, you know, so you can expense things out. There's all types of things. Flip back into the real estate side of it are we entering in an environment that there's going to be more foreclosures? Absolutely, 100% there's going to be more foreclosures. Is there going to be financial pain? Yes. Are we headed to recession? I believe yes. Is it going to be as bad as 2008? I don't know. I think the difference between 2008 and what's happening now is so many people got locked in at a low rate, where before we had we had just the opposite. We had higher rates on mortgages, and right now people are kind of sitting tight because if you have a 3%, 2%, or 2 7/8, whatever loan that you have that's below 4%, you're not likely looking at moving to anything else, because you have a cheap payment because of that artificially low payment. Are we going to see those numbers again? I don't think so anytime soon. It would take another crisis, and it'd take a lot of money printing, but we pay for that. You got to realize is that we're paying for that now because the prices of everything else went up because they printed so much money. When the federal government prints money, it causes inflation. Inflation is a tax. It's a transfer of wealth on people. So even though it made the bond prices go down to make these prices of these loans go down, and a lot of people got locked into this housing, what it's done is it's inflated the value of the houses, so it's inflated your property taxes. There are some neighborhoods, I just read an article on a couple in Florida that their property taxes, they did an improvement, they did a lot to the house, got the house in 2002, and anyways, they retired, but still working part-time, and anyways, they took a house that was in the family, got it in 2002, 2021 or 2022, they basically fixed the whole home up, put a second level on it that triggered a revaluation of the whole home. Anyways, make a long story short, is their property tax went up 600%. 600%. Now they have to sell the house because their tax bill is $90,000 a year because of it going up 600%. You know, there's many people out there that, you know, they're going to lose their homes just because of property taxes. Again, these municipalities and everything else, they depend upon property taxes, which they need to find another way to depend on revenue, but they rely on the property tax, and it's making property taxes so expensive that people are going to be losing their homes as well. Anyways, I know it's kind of scattered, squirrels here, there, and everywhere else. The bottom line is, you know, keep your eyes open. Storm is brewing. It is coming 100%. This past quarter was the first negative GDP quarter on print. I guarantee you in June it's going to be another one. So they're going to trigger the word recession. When that's triggered and it's officially in a recession, it becomes a self-fulfilling prophecy in my mind. You know, so I just see this storm just keep brewing. You know, it's this is kind of interesting. To go back, it says regional insight. The highest foreclosure rates are in Delaware, Illinois, and Nevada. And then major metro areas of Chicago and New York. Again, contributing factors: rising property taxes and unaffordability, climate-related disasters. That's another reason why there's a lot of foreclosures. There's a lot of people that own property, they can't afford everything because of insurance. How much insurance is going up? So that's increasing the risk of repos. Some people's property, what they call it, going naked in Florida, where it's like 40% of the homeowners and don't have homeowners insurance because they can't afford it. So anyways, job market, these are all notes that I made. Unemployment rate right now, it's steady at 4.2. That was before Microsoft. Jobless claims at 229, continuing claims at 1.8 million. Layoff trends. Major companies like Microsoft and Meta announced layoffs. Small business reporting reduced hiring. Again, the GDP contracted by 0.3. Financial strategies. Build an emergency fund covering 6 to 12 months. Diversify income streams through side hustles or investments. Career planning. Upskill in high demand areas like tech or healthcare. I don't know about tech. Network actively and stay updated on industries. I'm telling you right now, network. Your next job is going to be found by somebody you know, or somebody you know in a business, or somebody that you've known work related. You work your network. Investment opportunities. Consider investing in distressed properties or REITs. I'm not a big REIT fan anymore. Distressed properties, yes. REITs, no. Stay informed about market trends to make timely decisions. Yes, stay informed. Anyways, that is everything I wanted to cover. I hope you enjoy your day, and I'll catch you on that next one.